Good morning, trading world. It is September 22nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The Fed has come and gone. Let's digest what happened and where we are going. I was looking for a flush down into the 360s before the Fed in order to trust the next rally. With that being said, don't trust the next rally. The dollar is exploding higher. This is a very bad sign for the market. The dollar is scaring people to the point where fund managers have started to buy bonds. Time to get on your Apple Watch, because this is the one thing holding the market together now. And it's showing signs of falling apart soon. Central banks around the world are starting to come out and get in line with the U.S. by raising rates. Better late than never. This eventually could start to ease the power of the dollar. But again, it will take some time to take effect, if at all. Has the market broken yet? In my opinion, no. Jerome Powell sits in a very awkward position. On one hand, the only tool he has left to fight inflation is raise interest rates and slow the economy down. No one likes this. Not businesses, not consumers, or Congress, because money becomes more expensive for businesses, and when they can't borrow their way through hard times, they have to lay off workers or forced to go out of business altogether. No one likes this, but everyone needs this to happen. On the other hand, if he does not raise rates, businesses will have no choice but to raise prices in order to keep up with inflation. And at some point, this gets out of control. The dollar becomes worthless, and businesses are forced to lay off or go out of business because of the circulation of a worthless dollar. In which case the world stops using the dollar as the reserve currency. Either take your medicine now or take your medicine later, but either way, very few people will like Jerome Powell. What does all this mean for price action in the market now? Well, today we get a bear bias range day. But remember, we are still deeply oversold, so the market will have to come up for breath soon. We have a primary expiration coming up, and we get a great pop on Friday, and that'll be pretty much that coming up for breath. And all of this will happen after a little more downside action overnight. If you follow me, I have been saying my model calls for all hell to break loose on the 26th of September. Let's check the forecast by looking to see where we are as far as contango or backwardation. Alright, as we can see, OC, NOV, DES are in backwardation. However, be it a mild backwardation. So this means the storm is near, maybe right off the coast of this weekend, which would line up with my model of the storm touching down on the 26th, kicking things off with a huge gap down. From here, let's go take a look at the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 379 to the 380 area. Our Queen resistance is 381 to the 382 area. Then we have our King resistance 383 all the way up to the 390 area. On the support side, we have our Jack support at 377 to the 376 area. And then we have our Queen support at 374 to the 373 area. And then King support at 372 to the 371 area. Oh, by the way, these shaded areas on the chart, I was trying to keep up with areas where, in this case, sellers turn to buyers. And up here, it would be where buyers turn to sellers. And getting through these areas, that means it has possibly been converted from one to the other. So this was just my way of just kind of marking things on the chart for possible reversals, and what I use more so on the future side than on the options side. Let's get to the thesis. The main thesis for today is bullish, closing above the 377.39 with a projected target high between 378 and 396. Even though we may not see anything near that 396, I don't put it past tomorrow. The alternate thesis is bearish, closing below the 377.39 with a projected target low between 376 and 371. The current major channel we're in is 379 down to 364. The major channel below that is 364 down to 353. Intraday time frames are ready to try to pop up, but higher time frames, the daily, the weekly, are still running downhill. That brings us to the scenarios of the day. All right, here we go with our first scenario, which is going to be our range day structure. We can have an initial drop down, either right before or right at the cash open, find support and chop back and forth, but still end up possibly lower on the day. So we're going to have some choppy action going up, and I definitely will be looking to short, especially in this area right here where I have marked as buyers turning to sellers for now, at least the first time around. It's possible to make it through, but like I say, the first time around, it may bring about a decent short, and we might push a little beyond that, and then I may be looking to jump back in short again to hold overnight at some point midday and beyond. This again is our range day structure, so don't be surprised if we get or cross and close below the previous close here or even here today. Alright, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance area before spending the same energy we use going up to go back down the second half of the day. Also, be aware of a vice versa alert on the rounded reversal day type structure. And that rounded reversal alert just says that we could possibly do this. We could start with a continued push lower at the cash open. Find our way down toward our midday chop around either the queen or king support area. And then second half of the day, we could get a pop with the same energy we use coming down with the first part of the day. So that's the vice versa alert on the rounded reversal day type structure. But again, I will be looking for some type of pop today to get back into some shorts. Probably short term for just overnight. And here we go with our last and least most likely scenario, which is going to be our trend day up, which says we open gap up and start with a drop back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We find midday chop around either the possible queen or king resistance. And then usually we get a head fake to begin the second part of the day, and then a fade going into the close. And if we do fade or have a trend day, I would be looking for a rather big fade into the close today. There is a vice versa alert on the trend day model right now, and that vice versa alert would have us looking at something like this, where we get a gap down just before market opens. We get a rise back toward the previous close, and we find resistance on or before that previous close, and then reverse, and then we pretty much have our golden window or our main trend of the day, which would be down. Find our midday chop around either the queen or king support area. Open up with our usual head fake the second part of the day, and then we could get a somewhat rise into the close. So that is the vice versa alert on the trend day structure. As I do always, I think it is extremely important to make sure your risk is in line. For me, risk is more important than direction, because it leads to the most important job as a trader, and that's to protect the capital that you already have. We do this by managing risk and managing that risk in accordance to our account size. I hope this helps. Again, I am still in the middle of things, so pre-markets aren't steady. I'm not completely back to doing pre-markets every morning. but still working to kind of get something together to where it will be a lot more simplified for me. So hopefully there will be a few things in the works here coming in the next month or so. All right, again, I hope this helps. Hope this puts you on the track to a positive trading day. Make it a great one.